Wanted to take a look at XHB stock, which is the Homebuilders ETF. This one is just a moment away from another all-time high. It hit this high a little earlier, a couple months back, and it's touching that level again. What's going on? Will it actually cross? There are a lot of variables in play here. I also wanted to look at XLRE, which is the real estate trust ETF from Spider, and kind of compare the two. Wanted to kind of break some things down, kind of give you an idea as to how that industry is going to perform, some of the fundamentals as to what's driving the home builders and why these home builders might continue much higher. They've got a lot of potential. Unfortunately, however, we also are looking at an economy that's likely to contract. But those who might be looking to buy a house or build a house could still move forward. Let's jump in. I'll show you what I'm looking at. If you're joining me for the first time, thanks so much. This is a break-off channel from my other channel, Cannabis Stocks Analysis. And in here, I focus on the economy and how that affects the stock market. In this particular case, we're looking at home builders and real estate. XHB stock, which is the home builders ETF. This is a monthly chart. In late 21, I guess that was December 2021. If you look at this chart, you're looking at the blue, the very top there. Then the red was almost the last few days of December. Then all of 2022, we saw a sell-off. 2023, we're recovering. Where to now, however? You need to break down the economy and looking at interest rates. What's going on there? First and foremost, things are really kind of askew, and the Federal Reserve needs to get things rebalanced. Their very first goal will be bringing inflation growth rates back down to target levels of 2%. They do not care about employment. They only care right now about inflation growth rates. There are two things you need to look at when you consider that. First and foremost, the inflation rate that we see on a regular basis, but more so, one of the causes of that, of course, is M2 money supply. The money supply, the Federal Reserve blew up the money supply as much as they possibly could in 2020 to push the economy forward. Of course, since then, we've also had some outlying effects, such as the war between Ukraine and Russia. That is, of course, really kind of wearing down on certain pricing, such as oil. But even with oil prices are moving lower. So we're sort of recovering in that category. Home builders, though, versus XHRE real estate ETF. As you can see, they kind of move about the same. However, the growth rate of XHRE stock, which is an ETF, it's a REIT, and it invests in various aspects of real estate. The thing is with REITs, if you don't understand REITs too much, it's a real estate investment trust, and by law, to be categorized by that, you must pay out more than 90% of your earnings to the owners, which is a great thing if you want to take advantage of real estate growth. So as you can see, things have been kind of moving upward since, especially since October. We've seen the interest rate movements going much higher all through October. Stock market sold off, stocks in general sold off, but then November rolled around and that sell-off in the bond yields really kind of U-turned. It was more of an anomaly than anything. Yes, bond yields are going higher. They will remain higher for longer, but those big moves higher we saw in October really amounted to being an anomaly, and we're getting a little closer to, say, trend line. That 4.25, 4.5% might be between 4 and 4.5% might be normal for the 10-year. Nonetheless, as you can see, XHB, the home builders, is moving higher. Now, what is this? This is population. And as you can see, our population continues to grow throughout the years. And this goes back to 1990. But as you can also see, the trend line rate is slowing down somewhat. The country's still growing, but our birth rate is declining. We're still above 2. Now, these two charts here, first one, existing home sales, The next one, the lower one there, is new home sales. And this is really the big picture. The country hasn't been building enough homes, which is really one of the reasons why home builders are looking at an opportunity to really take advantage of this, given enough variables playing into what could happen there. I showed you the population gain. The country's growing, so we need a certain supply of houses. As you can see here, we're not selling nearly as much as we had simply because there isn't enough being built, first and foremost. Second, you had what happened in 2020. The Federal Reserve came in and dropped interest rates as low as they possibly could. Mortgage rates were down to 2.75%, 3%, 3.25%, wherever they might have ended up for each individual respectively. People went and found anything they can get their hands on. This drove prices up significantly. There isn't enough supply, and it got real inexpensive to get into a house. This drove up those home prices significantly. So those home builders are now looking at not nearly enough supply, and there's still demand. But what's really happening now is you've got all these individuals who are still sitting on 3% mortgage rates, but now mortgages are 7.25%, 7.5%, pushing higher. Maybe they'll drop down to 6.5%. You wouldn't get rid of your house at 3% if 3.25%, 3.5%, whatever you got, if you traded up and all of a sudden paid double in the mortgage. That would push up your mortgage payment by 50%. So you wouldn't get rid of that house. So people just generally are not selling houses. Because people are generally not selling what supply is there, anybody who's demanding houses are looking at low numbers of houses to buy. So it's really skewing the entire real estate sector. This is the Case-Shiller Home Price Index. And as you can see, we spiked earlier, came down because of the higher interest rates, and now we're seeing that spike back upward. So you have prices that, interestingly, previously, the big spike higher was on very low mortgage rates. But now we're seeing very high mortgage rates and prices still moving upward. Supply. There's not enough. We go back to the home builders. This is XHB stock. This is where if those companies are able to push out enough supply, there's certainly demand. And because of that, there's going to be profitability for those home builders in XHB stock. But what are we looking at? Here, of course, is the mortgage index. Mortgages are actually kind of, if you look through the 1990s, these mortgage rates are about where they were in the 1990s. This would give consumers sort of a modest mortgage rate given an economy that grew modestly. If you look at your history back in the early 1990s, where you can see early 90s to mid 90s, the Federal Reserve actively kept interest rates pretty high in order to get money supply back to trend line to get inflation downward. We may see several years where the Federal Reserve keeps interest rates higher for longer to get to inflation numbers where they need them. At the same time, restrict the money supply to get it back on trend line. So these home builders, given where things are right now, prices are very high because there's not enough supply. Despite that, mortgage rates are basically back to normal. So anybody who would be looking to buy a house in this category with higher home prices, at the same time mortgages, those individuals are likely to have a little deeper pockets than, say, someone with a credit score of 620, something like that. So those individuals would probably still pull the trigger because they need that house versus renting. Those home builders, they've got premium baked in to their profits simply because the supply and demand is so skewed. some of the numbers I saw that we're about 5 million houses short of normal. That's a lot. So if those home builders are able to push out, say, anywhere from 1 to 10% of that, that's 50,000 to 500,000 homes. There's a lot of profit available inside there. Those home builders, XHB stock, would continue to do well over time. Now, interest rates likely to soften this week if we see unemployment numbers that are going to get ugly. XHB stock could shoot up higher. It'll be interesting, but this is going to be an ongoing story. We're going to be looking at economic data for quite some time to get the full story of this. Make sure to hit that like and follow button. I'll keep you up to date with XHB stock, Homebuilders, the ETF, and the stock market in general. See you in the next video.